session rooms bigger.
Please welcome to the stage His Excellency Ali bin Ahmed Al Kuwari, Minister of Finance for the State of Qatar. His Excellency Faisal F Alibrahim, Minister of Economy and Planning for the Kingdom of Saudi Arabia. And His Excellency Mehmet Şimşek, Minister of Treasury and Finance for the Republic of Türkiye, for a conversation with Bloomberg's Stephanie Flanders.
Excellencies, we don't have very much time. Thank you very much for being here. I think Donald Trump would be really enjoying this conference so far. He would really like that we have begun every session with a question so far about his trip. And I'm afraid I'm going to be no exception, because we still have a lot of questions and details to think about from that visit last week. Excellency Minister Al Kuwari, we had very big numbers talked about in terms of the deals that Qatar was going to do with the US. I think there was 243 billion. But the President also talked about an economic exchange worth $1.2 trillion. That's 5 times Qatar's GDP. Are these plausible numbers? Do we think that this is, did you just engage in a sort of bidding war, or should we take these numbers seriously?
Well, I mean, thank you, Stephanie. Thank you. First of all, I mean, it was a great visit by His Excellency the President, to the region. I think this is a big statement, as Sheikh Mohammed said, for the region, and recognition how important the region economically, politically, and geo-economically and geopolitically, and from a stability. And this is, I mean, something that really we take it, also, and we appreciate it. From I mean, deals perspective, I think I mean, there was the $160 billion deal, with the Boeing. This is with Qatar Airways, and this is a normal, I mean, renewal of airplanes. This is part of the airline business. If you go with any airlines, this is normal, progressions. And the airlines, they do it over a long period of times, and also they have their own capital, their own access to finance. And they do like many deals, like buying and selling and lease buyback. I mean, so it's a very normal deals, and this is not something that we see it, And Boeing is an excellent aircraft, with the GE, engine. So it's in line with the Qatar Airways, strategies, in line with the, and the other deals is in line with our participation. The $1.2 trillion you talked about is. We are talking about economic partnership, and when we talk about economic partnership, it has a win-win situation. It's the U.S. companies doing business in Qatar, Qatar is doing business with the U.S., trade, and over some period of time. So it's not something abnormal. I mean, QIA continue to invest in the U.S. The U.S. is an excellent market, is giving good return for QIAs in line with their investment strategies. Looking to the trade, again, U.S. enjoying a huge surplus, with Qatar for many years. Is one of, I mean, U.S. is the biggest import partner for Qatar. So these things are really normal course of businesses, course of actions, and the U.S. being the U.S., it's the biggest, economic partner for Qatar. So I don't see this as like a big number, but this is a very normal course of actions, course of businesses, and course of commercial activities. It's a purely commercial, purely needs. Our defense, partnership with the U.S. is huge, and again, this is something that we benefit, as part. This is part of our, beefing up our military here in Qatar. So it's really something very normal, and we really value the partnership with the U.S. and, I mean, it's very significant.
And just to quickly follow up, I know that the QIA is going to have more and more firepower as you ramp up the LNG exports. What are the key priorities for your international investments?
Yeah, I mean, QIA, they have their own investment strategies based on region, based on sectors. Of course, I mean, the priority sectors, today is technology, AI, pharmaceutical, infrastructure, real estate, and they review these strategies every year, and they change it accordingly. You know, and as I say, I mean, today the U.S. is you know, I mean, the biggest opportunities are in the U.S. You know, in terms of these businesses, but they continue to spread around as well. And these strategies get reviewed every now and then to make sure like they are aligned and taking advantage of the opportunities, yet mitigating risks. You know.
And Excellency Minister Alibrahim, we had some even bigger numbers talked about in terms of Saudi deals last week. But I guess many people would say the biggest gift that the Kingdom has given to President Trump in recent months is a lower oil price, and it is, at its current rate, is much lower than the Kingdom needs to cover the external obligations, and certainly well below what you need to balance your domestic budget. So I just want, how are you thinking about how you're going to bridge that gap if the oil price stays roughly where it is?
So thank you, Stephanie. It's important to keep in mind that what we're undertaking in Vision 2030 and beyond Vision 2030 is a long-term, big-picture plan that is all about restructuring the Saudi economy. And I think other Gulf countries are going through something similar. We're doing that because we're investing in resilience, institutional resilience. This means that we will deploy the capital in the way that helps us get these returns, but help us also get the momentum to restructure. If you look at oil specifically, of course, our budgets are no longer driven by oil. Today, they're driven by our priorities. On the energy markets and oil, we've always been solving for long-term market stability. That guarantees that investments will continue to flow to provide the right kind of supply that the global economy needs. And of course, as part of that is OPEC plus discipline. So if you ask us 6 months ago, 1 year ago, etc., we'll always tell you that we're always ready for scenarios, multiple scenarios, and we have the buffers. We have the long-term fiscal planning and medium-term frameworks that help us adjust depending on what scenario actually plays out. But we're always thinking about not the next 12 months, but a longer-term horizon. And that's what most of the GC countries are doing as well. The GC countries and the economies are bright spots or jewels in the global economy today because of the ability to plan long-term, because of the ability to deliver long-term, and because of this institutional capability that's growing, coupled with leadership's vision, people's determination. But that institutional capability is helping us ensure that we continuously evolve and become agile.
And it is true that in the past, you have been agile, you've responded to periods of lower oil prices by cutting the domestic projects. I guess now we look at the pipeline of projects you have, things like the World Cup. They are commitments that are hard to reduce. So do you still have that flexibility when you have this enormous pipeline of committed spending and big projects?
So this transformation is anchored in discipline, but also bold action. We've prioritized our spend for many reasons. Predominantly, how do we accelerate our diversification? How do we continue to empower human capital and to continue to build institutional capabilities? Of course, a subset of that has to do with public commitments, global commitments, such as that of the World Cup and Expo 2030, and so on and so forth. And that's all in our priority list.
And Minister, Excellency Minister Şimşek, we were talking earlier, the biggest thing that happened last week during Donald Trump's trip to the region, at least where Turkey is concerned, was the lifting of sanctions on Syria, and indeed your president was on the phone call. We've also seen the PKK give up on 40 years of war against the Turkish state. What's the peace dividend or the economic dividend that comes from that for Turkey?
Well, peace dividend will be great. First of all, we're looking forward to...
Just hold on, I think you lost your mic. There you go.
Oh, it's not working? All right, I have a new microphone. So peace dividend is likely to be massive. First of all, having a stable, peaceful, and prospering Syria on its own is a huge gain for the region and, of course, for Turkey, because we've got 911 kilometers of border with Syria. So clearly that is going to help in a big way, because conflicts drag you down, and as we address the conflicts, as we rebuild, functioning states, it's huge boost for the entire region. So that has been a welcome move. But going back to one of the components of you've highlighted, the PKK has waged almost a 50-year war against Turkey. But last week, they have agreed to disband and disarm. This is also huge because, according to a study, including the opportunity cost, we have wasted almost $1.8 trillion over the past 5 decades combating terror. Now, of course, the peace dividend would be huge in terms of channeling resources to more productive areas for development, for progress. So in that sense, these two developments are going to be huge in terms of geopolitics no longer being a drag, but actually, being a source of leverage to help Turkey move up.
And foreign investors would be hearing that and would feel positive about it, but at the same time they have in their head the detention of Mayor Imamoglu in March and the very sharp fall in the currency that came with that. Investors were very frightened off at that time. They seem to be still hesitant to come back to Turkey, even though the currency is stabilized, even though you have very high, painfully high interest rates. What is it going to take to pull back the long-term investors?
Well, first of all, the 3-year program that we have put in place is on track, is intact, and is delivering. We have inflation, which is still high, but at 40 months low. And over the past 2 weeks, there's been, again, recovery in FX reserves. Investors are actually back. Interest rates are coming down. CDS, the risk premium, has fallen significantly by well over or close to 90 basis points. So actually, if you look at the past few weeks, there's been a recovery in investor sentiment, and that's reflected in financial market conditions.
And very quickly, not so much, though we don't see it so much on the sort of longer-term money, which obviously you would feel, I would assume, more comfortable than the hot money coming in. So we still haven't seen that. Of course,
the program doesn't rely on hot money, but FDI has also picked up over the past 12 months. Turkey is a very large economy with a pretty decent infrastructure and a huge pool of talented people and significant regional integration. So highly diversified economy. So I think when the dust settles, they will be looking at countries that are resilient to global trade fragmentation. They'll be looking at countries that would benefit from stability and prosperity in the region. I think Turkey remains the top candidate in terms of FDI inflows. And, with disinflation, predictability is improving.
Mr. Al Kuwari, we mentioned Syria. How are you continuing to support Syria? And are you thinking about investment in real estate or other areas where you can support reconstruction?
Yes. I mean, regarding Syria, I just add to the word of Excellency Mohammed, on Syria. Syria is very important. The stability of Syria for the region is extremely important, and the prosperity of the Syria is very, very important. And now we have a great opportunity with the presidency and the government in place now to really, to see stable Syria, growing Syria economically. In terms of our role for Syria, I think Syria now, they are building a country from scratch, and they will need all the help they need to, establish the country. They need energy, they need water, they need an economy, they need, infrastructure. So, us and our partners, for example, Qatar and Saudi Arabia, that we announced that we paid their areas with the World Bank. This will unlock around 180 million of support from the World Bank. Also, I mean, we're supporting them, again with our partners in Saudi and others, I mean, for example, to develop their electricity, to develop their energies. So I think Syria at this stage really needs help to establish themselves, as a country. Going forward, I think with the plans, they have in place, I think it's going to be a great economic opportunity there for investments and for really supporting the Syrian people. Syrian people are very talented. We see them, in Germany, we see them in many other places where they have, contributed significantly to the economies of these countries. So I think Syria's, growth, and development is very important for us. So this is something we're committed to do, to support them.
Just thinking about other regional investments, Kuwait is discussing converting its deposits in Egypt to investments. We saw the UAE do that last year. Is that something that Qatar is considering? Yeah.
I mean, President Sisi was in Qatar over 2 weeks ago, and we announced, again, an investment package, with Egypt. So we continue to see Egypt as a great opportunity for investments. In terms of whether to convert the deposits or, to do further investment, this is not something we have discussed, but we continue.
You're not discussing it.
No, I mean, it's an option, but it's not something we're gonna. It's one of the options. But in reality, what we see is Egypt is has great opportunities in the real estate, in the tourism sectors, in the manufacturing, and I think from an investment point of view, if we are to do an investment, it has to be in a purely commercial basis with a good return. So this is what, look. But again, the relationship with Egypt, it's very significant. And we view Egypt as a great potential for growth, in the future.
Mr. Alibrahim, the big shift for the kingdom last year was that you became a capital importer, not an exporter, which reflects some of the investments that you were talking about in your other answer, but it does mean you need to attract stable funding, and last year we saw another fall in foreign direct investment. So why is it, do you think, that the FDI is falling, and how are you going to get back on track for that?
So Stephanie, maybe I'll just take a step back and talk about the GCC a little bit overall, and I think tie that to your earlier question. The GCC countries' non-oil economies have grown 3.7% in 2024. That's almost double global growth. And if you look at each country's transformation, there's an acknowledgement that we've been for a while operating below our potential, which means that's operating at a loss. And that loss, maybe in earlier generations can accept that loss in the short term, but compounded is not good for future generations. And that's why I think Kingdom of Saudi Arabia, Saudi Vision 2030, and other countries in the region have taken it upon themselves to restructure long term. And because of that, the number of opportunities will only keep growing. We're not just moving from consumption to complexity and production and innovation and exports. We're also attracting capital that will help us do that because of the opportunity, and attracting talent at the same time. If you look at what's happening globally, let's say what's happening with US trade policy and its impact, we believe that this is ultimately going to lead to two things. One, we've always talked about what the new form of globalization will look like. Today that answer has been brought forward. Now we can actually start shaping what the world will look like in terms of trade. And number two, the global economy is only as strong as its weakest link. And we've seen multilateral platforms where His Excellency also participates with other countries in the region, that there's been growing, I'd say, drag on the global economy coming from weak links. I think the response to these policies will only create stronger global players, stronger global economies, from emerging to Europe to whatnot. If you look at things such as the Corporate Sustainability Due Diligence Directive that the EU announced, and how that was a little bit revised recently because of the impact that would have had on the European economy. Some GC companies today are divesting because of that. And we think that still needs to be revisited. I'll come back to your question. Foreign direct investment is a long-term game. It's flows and stock. In the kingdom, we're seeing signals of not just the actual number, but the number of licenses, the number of people coming into the kingdom, number of headquarters being set up, the number of deals that are being discussed and negotiated. In 1 year, we had a very large deal that helped spike that figure and then was challenging afterwards. But our target remains the same, 5.7% of GDP in 2030, around 100 billion in terms of flow in 2030. And we're working hard, 900 reforms to create a better business environment and continuously evolving.
Minister, one of the things that was a challenge, we talk about the weakest link. One of the problems for Turkey was the unorthodox monetary policy for a period of time. Now, my colleagues tell me you're the keeper of the flame for orthodox monetary policy. But it's painful at the moment. You have high interest rates to bring down inflation. Do you worry about the impact on the domestic economy of that? And is it sustainable? Are you going to have to do something to support consumers or raise minimum wage potentially ahead of time?
Well, sorry. We rebuilt monetary policy and a strong fiscal position as well. And I think all is set for disinflation. But no treatment is without any side effects. So we are aware of some dislocations in certain sectors. And that's why early this year, we've extended support to some of the labor-intensive export sectors. So we are looking at specific remedies while keeping the program on track. But the essence of the program is to bring inflation down so that we can set the stage for sustainable high growth. So a temporary pain is worth taking, going through. But at the same time, we're looking at short-term fixes to address some side effects.
So, but you won't, if you have, we're seeing potentially factories closing, we have households still dealing with the high cost of living and rising cost of living. Do you see needing to give in to some pressure to support households?
Well, first of all, last year we've created close to 1 million new jobs. That's new jobs added. So manufacturing is obviously struggling because our key trading partner, Eurozone, is still flirting with recession. So global growth is dismal, and our main trading partners aren't doing that well. So understandably, manufacturing sector is struggling. That's understandable, but manufacturing accounts for only 23% of our GDP. So the rest of the economy, in particular services, is doing really well, continue to create jobs. And households remain in good shape because household debt to GDP ratio is less than 10%. Okay. This is not a leveraged economy. So in that sense, while, again, short-term pressures are there, I think the key is to sustain the program, to deliver disinflation, and that way we lay the foundation for strong, sustainable, long-term prosperity.
Okay. And we've run out of time, but I do want to, the title, I want to get back to Geo-Economics and also potentially to President Trump. He'll like it. We started and ended with him. But the deals that, and certainly the trade deals that the President is doing or trying to do in different countries, there does seem to be a sting in the tail. You do the transaction, you give good value, and you announce a big number, but he is quite committed to making countries help him take China out of global supply chains. Now, this is a region that's hoping to benefit from continued much higher trade with China than with the US, but also the strong relations with the US. Are you worried, Excellency, that at some point he will force you to choose?
Well, I mean, we enjoy good relationship, of course, with the U.S. and good relationship with China. China is one of the biggest destination our LNG, trains, and again in terms of imports. We like to work, in balance with both with both powers. I cannot see, the U.S. would reach a stage like as countries, either me or China. I cannot imagine this. I think what we are going to see, there was a huge there was a huge disruption, in the trade system, what we have seen as a result of the Liberty Day, decisions. But to me, I think these things will settle, and we're going to see a new rules, governing, the trade and the global trade, in general. We have now some dust, we have unsettlement. I know that congratulations, I should say, in the reaching a deal last week, between U.S. and China on interim or transit, tariffs. But eventually, I can see this thing is going to really go away. There has to be really a new rules, for governing this. See, the world, the globe has worked very hard to build a globalization rules-based system. And I cannot just see this going away. There is going to be changing to the regulations, to the rules, how we engage, and, the fair competition, unfair competition. But eventually, I think there will be a new regulations. I don't see a problem, I think, dealing with the both places. I think China is an important country, U.S. is an important country, and we'll never get asked, to choose between countries.
Okay, very quickly.
If I may add, I think this administration has demonstrated its leaning in on dialogue. We've seen that with the U.S.-UK deal, with the early indications of U.S.-China potential deal. This region, Saudi Arabia, Qatar, and the rest of the GCC are always focused on prioritizing dialogue. We heard from His Excellency the Prime Minister today about dialogue. We saw President Trump in Riyadh last week, the result of dialogue, what it led to, including lifting the sanctions on Syria. I think, and realizing that it's part of our interest as economies in this region to connect strongly to international markets, for us to be more resilient and to be more meaningful partners of both the US and China. I think it's in the interest of both that we remain strong partners of both, being part of the dialogue and being part of this new form of globalization that His Excellency mentioned.
I think since we're running out of time, I'm going to let you have the final word, if you'll forgive me, Minister, and thank you all for the good discussion.
Thank you.